Good morning, good morning. Good luck to all of you. right at the 50% retracement from Wednesday's highs to today's pre-market low. This could be a huge point of rejection, but I feel like it needs to hold above Wednesday's low to be bullish today. You already ran 100 points. 65, 65 to 66, 72. Already ran another 100 points.
I take a look at
They're crazy. It's making huge moves.
Amex. These are earnings, Amex and CSX. We'll get to both.
See what happens here.
Once we have an opening bell here, of course, Sarah mentioned Amex a bit, but we'll dive deeper into the earnings report. You can see Diamondback and Datadog also making up the top four there. Opening bell's just 5 minutes away. Don't forget, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast. Welcome back. Goldman Sachs is out with a note on what else the AI spending boom. The firm says, quote, we're not concerned about the total amount of AI investment. AI investment as a share of U.S. GDP, they're saying, is smaller today, less than 1%, but in prior large technology cycles, which has been as much as 2 to 5%. Furthermore, again, quoting from this report, we estimate an $8 trillion present discounted value for the capital revenue unlocked by AI productivity gains in the U.S., with plausible estimates ranging from $5 trillion to $19 trillion. The numbers are staggering. I mean, Mike, the numbers are staggering overall. You can do whatever you want in terms of saying it's a smaller percentage of GDP. Obviously, the economy is a lot larger now than it was in 2000 or 1998. But they're still stunning numbers, and they are still enormous potential liabilities for the like of OpenAI, which is owing a lot of money from this day forward to 2030.
Yeah, I don't know if it was like all PC and IT spending counted in prior cycles or whatever it is. I don't know what to do with the $8 trillion net present value or the productivity gains that might get unlocked. I mean, the Mag 8, if we want to include Broadcom, is like 20 trillion in market cap, so I don't know how much of that is already being captured in that form. The actual hard numbers that Goldman's projecting is another 200 plus billion incremental capex by S&P 500 companies next year. That's total. That's not just AI. That's a pretty good number. It's a 16, 17% increase in capex. Now, Goldman does say that buybacks are going to suffer on a relative basis. There really won't be much of an increase in share buyback activity. And by the way, it's already under like 2% of S&P market cap. It's not like swinging the index around that much as it is.
That's what, yeah, that's what we just said. I know. Yeah, I know. No, I don't know.
Of GDP.
That's what, yeah, that's what the numbers are still so large, but, well, they're just big numbers. All right, let's get to the opening bell in the CNBC Real-Time Exchange here at the Big Board Breast Cancer Research Foundation. At the NASDAQ, it's Terra Innovatum, a developer of nuclear reactors. It recently listed via SPAC. Jim Cramer would have a lot to say about that. Were he here this morning?
About the nuclear part or the
Yes,
SPAC
the
part?
nuclear part. Both.
Yeah,
It's sort of an interesting combination.
It is. And by the way, independent power producers, however you want to define that, that's all these kind of all power generation things, absolutely flying. It's the largest single component in the Russell 2000 is Bloom Energy, I believe, which is like poster child.
Well, and they
for
did
all
that deal with
stuff.
Brookfield. That
Not
was on
nuclear, but
Monday,
natural
right?
gas,
Bloom
yeah.
Energy fuel cells to provide for data centers to actually, obviously the power there.
And a lot of that has calmed down. We
Look at that
basically had
move.
this super low quality rally. A lot of the thematic stuff was really flying. And I do think the last couple of days, you had 3 failed morning rallies in the S&P 500 the past 3 days.
Okay.
Now, it's netted out to not very much. The S&P's up more than 1% week to date. We've regained about half of last Friday's loss. We spent this entire week in the range that we traveled on last Friday. So I feel like it's kind of indecisive, inconclusive, but we're now more aware of some of the offsets to the bullish case. And I would just point to a couple things. One is Bitcoin has not come off the mat from that deleveraging flash correction liquidation event last Friday, Saturday. It's still like under 110, and I do think the market has been, because of that, hunting for excessive or unrecognized leverage in the system. And that's part of the regional bank story and whatever. It's so far been okay, but I think yesterday was a little bit uncomfortable because you had stocks down, yields down, dollar down, oil down,
Right.
gold and volatility up. And then you're kind of like, what does gold actually know here is starting to become
Gold
the
goes up
question.
no matter what.
It seems like it, yeah.
It's a one-way trade right now.
Yeah.
You did mention oil, Sarah. I mean, oil did hit a level I don't think we've seen in a number of years yesterday in terms of WTI. Obviously a benefit in parts for consumers, certainly. Overall, in terms of the percentage of their budget that they spend on gas, I think it's continues to move lower. There it is, 5 years.
Yeah, I mean, China's been a factor here, right? China, biggest energy consumer and buyer, and the ongoing sort of trade back and forth. If the upshot of it is weaker growth, especially for China, then that certainly weighs on the price of oil and the demand there. Wanted to hit American Express. It reported earnings.
Which, by the way, we should point out is not a part of the NASDAQ. Just wanted to, we came up
Our
earlier.
chart was wrong.
Yeah, we're in the midst of a transition, some technology. Soon we're going to be Versant. Anyway, sometimes things
Dow
get a little
Company trades
strange.
here at the New York Stock Exchange and is higher this morning, opening up more than 4%.
Yeah.
Healthy read on consumer spending, but also, part of the growth, there was 9% growth from their credit card member spend overall, and that was better. They also upped guidance. They sort of revised the full year guidance, revenue growth to 9 to 10%, earnings growth higher as well. This part of the story here is actually that they did a platinum card refresh, and they saw very strong results. Steve Squeri, the CEO, actually in the quote said that U.S. platinum account acquisitions doubled compared to the pre-refresh level. So they're in this battle, right, with the JP Morgan,
JP Morgan, yes, the
Sapphire card,
reserves, yes.
reserve cards, and then the Citigroup also has a premium card.
But they're now at $8.95, I believe the number is,
High,
annually
yes,
for the
it is.
platinum
They
card.
raised it.
It's a lot of money.
It's a lot of money, but they're saying that it's a lot of benefits as well. I think it's I
Yeah.
think it's like $400 a year they're giving now of dining credits to Resi. They own Resi.
Right. You have to be in a position to take advantage of the various things, and then you can make it work. But if you don't, which I guess is what they're banking on, then obviously it's very high margin business.
You're just paying the toll,
Yeah.
For the prestige and the metal card.
Yes.
Yeah, so this is just platinum. This is just a gray one. But yes, I guess, they have to just come out and churn out these big benefits. But the other sign I would say is that consumer spending, and credit remain healthy, at least at the high income. Because otherwise American Express wouldn't have seen growth like this.
Yeah, there's no doubt about that piece of it. I think the argument has been exactly how much of total spending is now accounted for by the 10% of households. It's not half. Moody's had a report that said it's like half of all spending. I think most of the numbers get it more like a third. So it shows you that it is a buffer to overall macro stresses. We're sitting here trying to survive another week without official data, and the S&P is the broader market's kind of of course. It's not ideal, but also we're kind of able to triangulate other numbers, or just maybe the market is falling back on. Listen, Fed's cutting, if anything, more likely than less, given the lack of data and given what we kind of surmise about the jobs picture. And I think the big questions have been, are we okay with jobs being the outlier? In other words, you have GDP tracking 2.5–3% by all the measures, and jobs are at stall speed. And that divergence, the market's saying we can explain it away. We can rationalize it. It's labor supply. It's immigration. It's demographics. And so we're okay with that now. We'll see.
And well, that's because it's kind of like out of sight, out of mind. The
Right,
report
part of
that
it.
I miss the most is the jobless claims.
Yeah.
The weekly jobless claims. Because if that starts to tick higher while job growth is becoming more scarce, then that is a bigger
And it was
concern
supposed
for
to,
the
right? You were
economy.
going to have a lot of the government layoffs hit, and continuing claims have been on the higher side. So you did have, look, we had the 10-year go below 4% yesterday. I think part of it, it's a little bit of risk off, but also, oil going down obviously means that there's sort of a disinflationary story taking hold, despite the fact you have rolling inflationary goods pressure that's working its way through, tariff and otherwise. So I think, we're okay with that. I think, bigger picture, it would be a little weird if we had a week of this kind of downside chop in the market and the S&P, didn't at least, test its, I guess we're under the 50-day at this point. Oh, no, 65.60 is the 50-day. It just feels like if we're going to have a proper October pullback, that would be part
We're
of the
up
game.
1% this week.
That's what I said, up 1% this
not
week.
bad.
And last week's low, which we closed at the low on Friday, was more like 65.50. So, we're still a percent above that, as you say. So it feels like, we're trying to find our way, figuring out if we can escape with this, just
Well,
a little bit of a mild
really good.
pullback.
We're not that
Earnings
deep
are very
into
good.
earnings season, but it's looking good so far, both on revenue and profit growth.
Yes.
Overall, even the banks, which maybe didn't get the reaction that they wanted, decent results.
No, you're right. It's been an interesting week when it comes to the banks. To your point, and we heard from the largest banks earlier this week. Many of them were strong reports, particularly Wells Fargo, the stock of which performed very well. But you did have comments from Jamie Dimon. He was talking specifically about Tricolor, a company that there may be alleged fraud, where there are some losses related to it, saying that there may be more cockroaches. Certainly when you see one, there's typically more. And, that was followed. First Brands, obviously, the bankruptcy there. Again, $2 billion that seemingly disappeared. Some questions certainly around fraud. And then followed yesterday by that news we got from both Zion and Western Alliance. All of this sort of going to the idea of collateral integrity and underwriting standards. Let's get to Leslie Picker, who follows, obviously, all this very closely for us, specific to many of the regional banks, Leslie. I don't know what you're picking up this morning, but certainly we've seen a bit of a rally in some of those shares that did get hit quite hard as the day moved along yesterday.
Yeah, you hit the nail on the head there, David, when you were talking about collateral integrity, because a lot of the questions concern non-depository taking institutions. So basically these loans that are being made, whether it's through the regional bank environment or through the traditional universal banks, to areas such as that aren't other individuals or other companies, but they're basically vehicles that provide financing outside of the banking system. This is an area that's grown tremendously over the last decade and really the last few years. It's something that's gotten the attention of regulators. They've tried to kind of change the way that these companies are monitored as it pertains to the loans that they're making in the NDFI environment, as well as the types of reporting that they're doing. So because we've seen issues related to this for both First Brands and Tricolor, and now with regard to Zion's and that borrower that it shares with some other banks, there are a lot of questions as to whether there are more cockroaches, as Jamie Dimon might call it, in the system as it pertains to these types of kind of opaque loans that are just, they're over $1 trillion. I believe it's like $1.5 trillion throughout the banking system. So this is definitely in focus as the regionals report this morning. However, the numbers and the guidance that these banks have provided this morning have definitely assuaged concerns. There was, this jump to kind of the worst case scenario in the market yesterday. And then as we've seen reports from Regions and Fifth Third and Comerica and Truist come out this morning, all of their credit quality metrics, or most of their credit quality metrics, especially as it relates to guidance, seem to be heading in the right direction. And as you can imagine, they've been fielding lots of calls on, or lots of questions about this on their calls. And they basically say, look, yes, we lend to these types of vehicles. However, we are well diversified. We feel comfortable with our underwriting standards. And the market seems to be rewarding that today. You can see Truist shares up 3.1%, Huntington, which also reported up 1.7%, guys.
You know, Leslie, as the sell-off in the group deepened yesterday, there was a side story that I think people were focusing on just a little bit, which is that some banks increasingly have been bidding for reserves at the Fed, right? You had just a little bit of a, in the wholesale money markets, you have some seasonal tax payments and maybe some reserve drain. And I don't think people were saying that there was genuine distress, but it does bring up the question, and this was in the news earlier this week, about, the Fed is looking for that moment when it could stop shrinking the balance sheet and essentially say we have the level we're okay with just to service the banking system. So I just sort of wonder if basically once you start noticing stress points, more come around.
It's the question that I've been asking myself too, Mike, because it does feel very interesting, because at least two of these instances involve fraud. And when you hear something like fraud for a borrower, that really feels very idiosyncratic. It feels like more of a one-off. And here we have two instances of alleged fraud within a 2-month time period. And so it kind of makes you wonder, and I think that's what got everybody in the market so concerned, is whether the types of structures allow that fraud to happen, whether there's different underwriting standards, or whether there's limited ability for the banks to really monitor their counterparties in these environments. And so there's just a lot of unknown there. And then you had the whole cockroach comment from Jamie Dimon suggesting that perhaps you could see more. So that had everybody really on guard as well in terms of how much of a contagion there might be from the instances we've seen over the last few months.
Jamie's always so negative. I mean, he's had a lot of warnings
sure.
and concerns about the system in the last few years.
Yeah.
JP Morgan's brand is we are the one bank that will survive the end
Correct.
of it all.
It's
We're the
so
the fortress balance
and they're
sheet,
rewarded
right?
for it.
And that's,
And-
it was Hurricane
yeah.
Jamie. He was talking, that was quite some time ago. Of course,
Yeah.
the hurricane's coming.
By the
Yeah,
way,
he
on the
is-
fraud point, I mean, Madoff was exposed in 08, okay? He'd been doing it for decades. So fraud gets surfaced when people start looking harder, or you can stop extending and pretending, or whatever. So, I mean, it could both be fraud and be a matter of, okay, we maybe got some excesses somewhere in the lending system.
We went a little too far.
Yeah.
We're going to keep a close eye on it, but of course the debate right now is it really essentially one-offs, or is there something systemic? Certainly it doesn't seem to be the belief that it's a systemic issue. Wanted to move on now. Shares of Oracle are down, guys, almost 5%. This after a move up later in the session yesterday when the company had its investor meeting. This was sort of towards the end of this AI World Conference they were having in Las Vegas. I was out there on Monday. Man, it's been a long week, talking to the two CEOs of Oracle. And at the time, we were talking about concerns about revenues, not the revenues that were coming into the company, but the margin associated with them. And they did give some hints that certainly reporting about that had not been accurate. I think we may have that. You can take a listen.
We're entering a phase of hypergrowth where we'll see hypergrowth not just in the top line, but also in EPS as well. If the three things to think about, revenue, EPS, and margin, I think we'd we'd much rather have a business that's growing very predictably at the top line and on the earnings level as well. So in terms of profit dollars, we expect this to be.
Was it misunderstood though? I think it was the information when they talked about 14% operating margins or something very low. They were at least referring to internal documents. Was not my reporting.
David, it's actually quite simple. One is that I think we do an amazing job at Oracle of actually communicating to our investors, and you'll see more of that this week. So I suggest you listen to the things that we talk about because they're actually accurate and vetted. The second is, look, this is a business that's going through immense growth. I think that if you think about any business that's growing very rapidly and it has some capital component, in general, you have to build out ahead of that demand. The reality is the fact that we have a very
Shorts are really defending the orb, but the buyers are resent. They are not giving up. Wow.
People are not going to be
I don't think this orb is going to hold. It's going to stop me out right now.
our AI infrastructure business or any of our other businesses.
One peep into the orb, I'm out.
All right, so there you heard it. And of course,
If it goes to 46.75, I'm out.
that interview by introducing the following, and I'll refer here to a UBS note where they talk
Might-
about 15 times fiscal
I
year
was about to say it might be explosive. Yeah, I'm out.
cheap, noting
Just to stop me out.
they took their fiscal year 30 cloud infrastructure, Oracle cloud infrastructure revenue guidance up by another $22 billion to $166 billion, and its deal backlog now is over $500 billion, setting a fiscal year 30 guide well above estimates, where at least they had been, and also pushing back on GPU infrastructure gross margin concerns, saying they're 30 to 40%, at least over the life of a deal, and that was better than feared. Stock getting hit though this morning after that move up yesterday.
I was going to say, giving some back. I mean, I don't know if we're in the game in general of valuing these stocks on 5-year out earnings, but that's where we are because
So,
they feel like they have the order book in the bag.
6,
I think the way investors are viewing this whole thing
6.
is, okay, this is the new cloud, right? And so when you started to ramp up cloud services, obviously the margins aren't where they're going to be once you scale. It's hard to know exactly how much of it is actually drawing from, the cloud subscription business. I know Amazon has not traded very well because it feels as if other types of deals for AWS aren't coming through. But yeah, if Oracle has the build out at the pace it thinks it's going to get, and OpenAI is right there with the money, then you have a pretty good glide to that earnings number.
Did they give the CapEx numbers? The target?
Well, I mean, they've been at 35 billion. I think that number's remained roughly the same. I don't believe they changed it.
Because that was something that I think analysts were looking for too. I'm not sure if they got it.
Yeah,
It
I don't.
felt like they got the updated
I didn't
version
see
on
all
that.
of the slides, but I believe that's where they had been. I don't know that they reiterate anything different. If in fact that's the case, we'll let you know. But you can see the stock. But it does go back, Mike, answer to the idea of OpenAI. I mean, we're going to focus on this a lot in the coming months and years. Revenue growth at OpenAI is incredible. Obviously, they have 900 million users at this point. Nonetheless, the commitments that they conceivably have are so enormous that it will certainly be a focus for many, even though it's a private company in terms of what it's. So many other public companies are in part dependent on that spending and whether it can be sustained. Sam Altman's just going to keep circling the globe, I guess.
Well, that's why they're getting so creative with these deals that they're
Yeah.
making, like AMD. Did you guys see this? There was a Bloomberg report about a Meta Blue Owl deal where they would combine, they would have this sort of like joint venture to finance a new
I've talked
data
about that
center.
deal
Okay,
actually a number of times.
So you
What
know about
Bloomberg
it.
reported on was the finalization of that deal, $30 billion to your point. It's for the enormous, what they're calling Hyperion
Yes.
data centers in Louisiana, in part some of the ones that we've showed, which they overlaid over Manhattan.
Yeah, they've got more than 20
But
of
it's
them
an
now.
interesting structure because I've made
Yes.
this point many times, Sarah, in part because Meta is the tenant. Meta is
So tempting to
paying
play
something, but
a
it's
trend line, but
Correct. Right.
those are weak, man.
Credit rating.
right. And so that's why
There you
CapEx
go,
is
failed.
understated. Because this is essentially Meta credit you're taking, which is great if you are the owner of the data
It
center.
also speaks to just how eye-popping these numbers are, that even Meta, which is so well capitalized and profitable,
Yeah.
has to spend so much.
They have to spend so much, but they also don't want it to even be. They own some of their own data centers, of course, many, and there's that 65 billion or whatever the number is in capex. A lot of it's going towards that, but this is even on top of that, even though it's seen as opex. All right, that's all we really have to go,
All
Sarah.
right, let's go. But
do a
before we
fast
head to
bond
break,
report.
let's give you a bond report because the 10-year yield did go below 4% overnight. We're sitting just at that level. This morning, no data. We miss it. We're going to get CPI though next Friday. Hopefully, that's the word. We're just below actually 4% now. We'll be right back.
Lower highs, lower low. So even though the EMAs are showing uptrend on the 5, this might be the sign it's going down again. I don't know if it's smart to short there. Even though that this is the 50% retracement area, there's 3 confluences, no EMAs, just levels. I don't know. I don't know if it's a good idea to short there. It's really strong.
Take a look at shares of CoreWeave, and we should show you Core Scientific as well. This is a deal that I've talked about a number of times. Remember, CoreWeave in a deal to acquire Core Scientific for 0.1235 of its shares. But shareholders of Core Scientific look at the peer group and say, vote's coming up on the 30th. We'll have more next week on this as we get closer to that vote. But as I've indicated previously, from what I've heard from many holders, and obviously 2Cs is running a proxy fight against it, but many others as well, this is not going to happen. Right now, the votes are going to be against. And so Core Scientific will remain a public company. Why? Well, also because yesterday CoreWeave in a statement said, we're not raising. Best and final is what they say. And then they go through a number of different reasons as to why, in terms of operational challenges, delay that Core Scientific has referenced in its public filings. They talk about it being basically the key customer regardless, CoreWeave. And so whoever buys it, any acquirer would simply be buying the right to become CoreWeave's landlord, is what they say. Again, may focus a bit more on this $5 or so billion potential deal that most likely ain't going to make it to the finish line next week as they get closer to the vote. Take a quick break. We'll be right back.
My Weeble always does that to me on very important times of the trade, of the trading session. It blocks me from changing from calls to, anyway. Now I'm like missing an entry. If could have missed an entry. Let's see. No, not quite. So yeah, but it's very annoying.
had a nice turnaround. You can see it there, up almost 0.25%. We're in, I think the top 10 are now 39% of the index. Is that right, Mike?
Yeah, it's become even a little bit more uneven in the last few months with Nvidia racing higher, especially. It's interesting. I mentioned we had 3 failed rallies past 3 days. Today we started in the hole. Market's trying to rise towards yesterday's highs around 6,700. It does feel as if sort of the volatility goblin was let out last Friday, and we'll see if it causes more chop. I have been watching Bitcoin because, again, it remains under pressure, down about 2%, whether that's still a risk appetite tell or not. And then the VIX, it's at 24. You know, that implies more than 1% moves a day in 30 days. Doesn't always mean it's right, but that's what we're priced for at this point.
Still, fundamentals are good. JB Hunt is the best performer of the week, up 22% on earnings.
After earnings yesterday.
Yeah.
Mike, thank you for being here, of course, this hour. Coming up, we'll have more on the regional banks. We're going to speak with the CEO of Huntington Bank Shares as well. Keep it here.
The CEO of Huntington Bank Shares will join us fresh off concerns believed around regional bank credit exposure. That'll be an important interview. Still no data with the government shut down here. So we're looking for these alt data, searches to tell us what's actually happening, especially on jobs, because that's the big question mark for the Fed. Interestingly, the Fed goes into its quiet period, its blackout period next week ahead of its meeting the week after. So maybe here are some of the other sources they're looking at to tell us what's happening on jobs, or at least investors are looking at. The Indeed data. Indeed is the job posting site.
Okay.
So it turns out there is, what we're looking at here in the Indeed data is interest in holiday jobs, and that is trending higher if you look at this year. The purple line, 2025. What does that tell us? More people.
Okay, there it is. Yeah,
there it is. See,
yeah.
as you can see,
It's the
there's
short line.
always interest in holiday jobs around this going into the holiday season, right? Temporary work, and then usually that tails off. That's normal, right? Seasonality thing. But what the purple line is showing is that there's more interest this year in holiday jobs.
What does that
People
mean?
looking that temporary work.
Is that good?
For the labor market, right? Because it's more people wanting to either pick up more jobs, work temporarily. I mean, when they're out looking for jobs, it means they don't have jobs and they're looking for other sources of income. So that is something we're watching.
Okay.
We reported a lot on the slowdown in the jobs market. We have no idea what the September report looks like, but that's potentially a sign.
And what else you got in your alternative data
It's
sources
very
here,
alt.
Sarah?
This is very alt. So this
Yeah.
is the Google search. This is from Nick Kolas.
Okay.
And Data Trek. And here he's looking at Google search numbers of finding a job and new job. And what he found there is actually they hit 20-year highs, those Google searches, which tells us something about what people are Googling right now, which is how to find a job and getting a new job. We have not seen jobless claims tick higher. That is, people filing for unemployment claims, which would signal layoffs. But we have not received the data in recent weeks. So,
I mean, that, again, we're left with, and you are, frankly, I don't have to deal with this stuff, but it's key for you. Like,
It's key
you
for all
search,
investors.
you could also argue a really good jobs market where people think there are other opportunities is a reason to put in, hey, I'm looking for a different job or a new job,
well,
right?
we haven't typically seen that during,
Okay.
if you look at some of the Google searches,
Okay.
that you don't usually see big searches for new jobs. But agree, like job switchers happen sometimes when wage growth is a little
Yes.
higher. That sure could be the case, but we haven't seen the switchers' wage growth numbers move higher. They've sort of been lower in the ADP report, for instance. But yeah, we really don't.
We're
we don't
flying
know
blind.
exactly. We're flying blind
What do you
on
think?
the data. We
Got a
have-
feel for me on this?
Well, the feel is that, we're sort of in a low job growth economy. We haven't seen a lot of firings lately, and I think the feeling is things have cooled off on jobs, but not deteriorating, nothing very out of the ordinary, because, all the reporting we're getting from companies is that credit's good, the consumer's in decent shape. The unemployment rate is still relatively low, even though we've seen it tick up a little bit. It's still in the low 4%. So there's no real worrisome sign on the economy. But if there is a change, for instance, in layoffs, we haven't seen that yet. And maybe it happened in the last few weeks, and the data, we just haven't received the data. CPI will be the next big important one, because that's going to be especially released next Friday.
They brought people in to actually put that
Actually
together,
do that,
right?
the Bureau of Labor Statistics. And there is a risk that if there is a firming up more than, say, economists expect, like something really, showing, inflation, the Fed meets the next week, and it's in quiet period. Next week it's quiet period. The week after, it needs to make a decision. The market is firmly pricing in a cut for end of October and also into the December meeting. There's a risk with that CPI report. We
That
don't
it
know
could
exactly
actually-
that if
could
it's
actually-
hot. If
Who's
it's really
running
hot.
the BLS these days, by the way? I know he withdrew
He
the
withdrew
nominee
the
after he fired the
nomination.
head of the BLS. So
I don't
we
know
don't even
who's
know.
running the
Okay.
BLS, but
Yeah.
I think we're back to sort of trusting the data. Let's just see the data.
Well, right, we don't have any data to
Yeah.
trust right now. All right, let's get to the broader market as well. Major averages looking to close out a positive week. Even as volatility ramps up, of course, amidst concerns about credit risk. Of course, we've still got the trade war with China, the stability of AI and that entire ecosystem. Joining us, Dan Niles. Niles, investment manager, founder, and portfolio manager. Always good to have you, Dan. You say you remain positioned for the S&P to slowly melt up between now and at least Thanksgiving. Why?
Well, I think when you look at the big picture, yes, we've had a lot of cockroaches, as Jamie Dimon had said. When you see one cockroach, there are probably more. But if you look at it in total, and you look at the four biggest banks in the world that reported, the U.S., Bank of America, Wells Fargo, and then you look at the two biggest investment banks, Goldman Sachs, Morgan Stanley, combined, that's $11 trillion in assets. Every single one of them had revenue and EPS forecasts go up for December. Every single one of them was generally constructive on what they were seeing in terms of consumer strength. So yes, do you have some issues with fraud? 100%. Are there probably more? Definitely. But in general, which is what you have to look at, things seem very good on that front. So I don't think this is going to turn out to be something systemic like you saw in March of 23, or obviously when Lehman Brothers failed. And so you're seeing this morning, I think, you saw an upgrade of Jefferies. You've seen, Western Alliance as well as Zion's. They're up, I think, 4 to 6% last time.
Got it right next to your face right now. Yep, we just saw them.
Great.
Exactly. Good call.
Perfect.
You had it exactly right, Dan. And there's Jeffries as well. All right.
Yeah,
So what? It's rate cuts essentially that are going to just keep this rally going.
Yeah, I think that's it. And really, you've seen that since COVID, right? Like, unless you think a global pandemic is wonderful, the S&P was up 14% that year. And why was that? Well, you jammed about half of GDP into the economy over the period of 2 years in terms of stimulus. And so you're going to see a rate cut on October 29th. I think you'll see another one on December 10th. The Fed has decided whatever inflation metrics they see, it's going to be transitory, just like they did in 2021 when the market S&P finished up 27%, despite inflation surging from 1.3%, I think, to start the year to 7% by the end of the year. And then you've got strong Q3 earnings. Don't forget, these companies all gave guidance for Q3 in July of last year, when it wasn't that clear that we would be in as good a shape in terms of the economy as we are right now. So the bar was set really low. And then the AI data you're getting from the likes of TSMC or ASML, they all still seem very positive. And more importantly, with regards to the AI data, you've had some very compute-intensive apps released recently between Nano Banana for Google, and more importantly, Sora 2, which helps you generate video from OpenAI. That takes several orders of magnitude more tokens to generate this stuff. Ultimately, you're going to generate revenues, which I think is going to be where the real problem comes in late next year. But for right now, the demand for these tokens is skyrocketing because of the video generation stuff. And, that's going to
you don't worry about the setup, though, on earnings, that a lot of this good news is already in the prices, especially with the tick higher in the VIX?
Well, but that's my thing. The VIX has gone up a lot. You look at the CNN Fear and Greed Index I was looking at yesterday. I was actually surprised because I expected to see it in greed. Instead, it's actually sitting in fear. And so when you have that kind of setup, are you going to get some blow-ups? 100%. But do I think the market finds a way to keep rotating into other sectors that keeps driving it up? Yes. Now, one thing I've been saying for a while is I think you're going to have to get into a broader group of stocks than just 7, because the rate cuts are going to help other names. And if you look at it, at least through the close yesterday, from before the last Fed rate cut, the S&P was up about 0.3%. The Russell 2000, though, was up 2.7%. The Magnificent 7 were down 1%. So you've definitely seen the market broaden, and I think to your point, Sarah, you're going to get some blow-ups because expectations are high. Multiples are stretched no matter how you want to look at it. But I think they can get more stretched because come May, don't forget, we're probably going to get a new Fed chairman who's going to want a lot more cuts because President Trump's going to pick him. And you've got 2 rate cuts probably this year, probably another one in January. And then in May, you can look forward to that. And so I think, unfortunately, the market's going to keep melting higher until this easy money.
It's interesting you say unfortunately. Are you short, Dan? I'm not sure why it's unfortunate. But I did want to come back to you. Before we started talking credit quality the last couple of days, we will continue to talk about an AI bubble, and I use the word with quotations around it. But I like to come to guests that I've been talking to for years that have been around and were there in the 90s as well. The numbers, even if Goldman Sachs says it's a percentage of GDP, they're lower than they were during the internet boom. Nonetheless, they are staggering, and the revenues may not be there to meet the commitments that have been made by the likes of Nbhd and many others. Where do you sort of stand on that? And what is your expectation as we move into 2026 and we start to try to look for more examples of the enterprise using AI in a significant way and the revenue number going up even higher for many of the providers?
Well, that's exactly why I said unfortunately, because I remember this scenario playing out in the late 90s. And so let's step back for a second. You've spent $800 billion in cumulative CapEx over the last 3 years by the big 5 hyperscalers. Now, what has that generated from native AI companies? And by that I mean guys that don't have, the public cloud stuff. So if you look at OpenAI as an example, they have 800 million users, probably 20 million or so paid. They're going to generate about 13 billion in revenues this year. So 800 million users, 13 billion in revenues. You look at Netflix, they got 300 million users. They're generating 45 billion in revenues. Now, OpenAI, I think there's a reason Sam Altman went from, well, we're really glad we don't have to have sex chatbot avatars in August on our platform, to now he's saying, well, I'm going to allow erotica on the platform by the end of the year. Because at the end of the day, you got to figure out how you're going to convince consumers who are used to getting results for free every time they use Google to now start paying for this stuff. And it's great that people are using Sora a lot, but the problem is you got to figure out how do you make money off of it, because it's ridiculously expensive if consumers are not paying for it. So that's what I go back to, is that the entire native AI industry will generate revenues of $20 billion this year. 13 billion from OpenAI. Does that make sense against what everybody is spending? And so that's why I said unfortunately, which is I think the bubble's going to keep inflating because this video generation stuff is going to demand a ton of tokens. Everybody will get super excited about, oh my God, the demand's through the roof for NVIDIA and Broadcom and all the rest of them. But eventually you have to be able to generate money to pay for this. And I think you're going to run into a problem and consumers are used to getting it for free.
Well, Dan, we are going to be entertaining that question for some time to come, I have a feeling, and certainly we'll continue that conversation with you. Have a great weekend. Thank you.
Thanks, guys.
We are about less than 30 minutes here, over 30 minutes in the trading session, less than 30 into the hour. Here are 3 big movers we're watching. Railroad company CSX in the green after a top and bottom line beat, higher total volumes from last year as well. Their CEO fielding many questions on the call about whether they'd consider a merger after the deal between competitors Union Pacific and Norfolk Southern. But he told analysts their whole focus is, quote, performing well as a standalone company. Stock up 2%. Obesity drug maker Eli Lilly and Novo Nordisk both lower again after the president vowed to lower the cost of weight loss drugs for American consumers yesterday at a White House event. Fat loss drugs, he calls them. And then American Express gaining after results that saw higher billings and improved guidance. The CFO calling out, quote, excellent credit performance on the call, with both U.S. consumers and small business delinquency rates still below 2019 levels. So good picture of health there on the economy. Here's our roadmap for you for the rest of the hour. After the break, an inside look at the health of the regional banks as concerns rise this week around bad loans.
Jesus fuck. Go fuck yourself. Fuck you. Ah, damn. Oh my God.
We're going to talk about why this shutdown could last a whole lot longer.
And a $300 trillion mistake. This is crazy. PayPal partner accidentally minting a mind-blowing amount of stable coins, sending a chill across the crypto ecosystem. We'll tell you the whole story when Squawk on the Street returns. Stay with us.
Okay.
Regional banks, bouncing back, at least their share prices this morning. Pressure, of course, this week. Market's been focused on credit quality, and there have been some concerns about that. We've gotten a slew of earnings as well this morning that seem to be providing some relief, including Huntington Bank shares reporting a better than expected quarter and upbeat guidance. Steve Steinauer joins us now to discuss. The stock is up 1.5%. But Steve, let me just start on the question I'm sure you've been getting from many of your investors as well, in terms of how you view your own credit risk right now. Worries about collateral integrity and things of that nature. When you look at your assets, are you comfortable where things stand?
David, good morning. Great to be with you again. We're very comfortable with where we are. We put an aggregate moderate to low risk appetite in place 15 years ago. We've operated under that ever since. We've just had consistently great results. Charge-offs this quarter were 22 basis points. Non-performers were reduced. Delinquency reduced. We're in really solid position. And as we look forward, because of the controls that we have in place, the diversification, how we manage the portfolios, we're quite confident in our portfolio and the performance.
And when you look at some of your competitors or these broader concerns that have seemingly come to the fore the last 48 hours, I don't know, I'm curious as to how you think about them, whether you think there's anything systemic or whether this is something that will pass very quickly.
Well, I've been enrolled here for 16 years, so I know most of my peers at these institutions. The banks, the regional banks that are broadly diversified, and that's almost all of them, are really well managed, in my opinion, and these are one-offs. You heard a couple of CEOs mention these as one-offs. I don't think they're systemic. I think the banks have done a really good job as a whole post the great financial recession of diversifying risk and managing it much better. So I think a lot more risk that used to be in the system is now out of the system, and over time we'll see the banks perform reasonably well. Of course, there'll be one-offs from time to time.
Sure.
Okay, well, that's reassuring and good. I mean, broadly speaking, so credit looks good. How does consumer look? How does small business look? How does lending look?
Yeah. So we're optimistic about our loan growth. We're having very high, 8+% loan growth for the year, and we expect to continue that going forward. In terms of the consumer, it's always been a tale of two worlds. Low, moderate income consumers are feeling the stress from the tariffs, I should say from inflation generally, and that is not changing, and there's no reason to think that will change until inflation is reduced further. I'm optimistic that'll be the case as we go forward, but the balance of the consumers are in great shape, and certainly our portfolio is performing exceptionally well.
I mean, you raised the 2025 net interest income guidance. What sort of assumptions are you making there on deposits and on rates?
Well, we've raised it again. We've had peer-leading deposit growth. We have peer-leading loan growth, for that matter, and the same on the fees. So on literally all cylinders, we're firing well, and the deposit side, because the Fed has decreased short-term interest rates. They've taken one turn. They've alluded to another downdraft later this month. That is repricing deposits, those that are variable rate, in line with the change in interest rates. So that's actually widening our net interest margin a couple of basis points.
Stock hasn't done much this year. Yours are taking one down 3 months, down 8%. They're basically relatively flat over the last year versus obviously the larger cap banks, many of which have seen significant moves up in their stock prices. Is that a Senate yesterday. Let's go over to Emily Wilkins. She has the latest on exactly where things stand. Day 17, right, Emily?
Day 17, David. And the question really right now, how long is this shutdown going to go? Is there any off-ramp? And one sign we're looking at, usually when the Senate is stuck like this, you do see a bipartisan coalition emerge. It's often dubbed a gang. They're bipartisan. They forge a breakthrough. And we're just not seeing that this time. There are some bipartisan talks going on, but even Republican senators who tell me that they want to work with Democrats on their big ask, remember that's extending those Affordable Care Act tax credits, they tell me that they don't see a firm working coalescing. I also spoke with a couple Democrats, including Senator Chris Coons. He said part of the difference this time is that even if Democrats and Republicans come to an agreement, as they have in the past on things like spending bills, the Trump administration has previously undermined them, as they did when they canceled billions in funding that lawmakers approved.
There's been a loss of trust between Senate Democrats and the administration and the House because of what's happened over the last 6 to 9 months in terms of respecting bipartisan spending bills that were signed into law last year.
Meanwhile, Republican leaders have also been in lockstep in saying no negotiations on health care until the government reopens. Senator John Cornyn, he's a Republican, and he's been part of groups tackling immigration and gun reform in the past, is now saying that Democrats, including Senator Chuck Schumer, seem more comfortable being in a shutdown.
I think he's afraid to reach some sort of deal like we typically do in these circumstances because he'll be attacked by his progressive radical base.
With a lack of trust and both sides digging in, it doesn't seem like a shutdown is going to be over anytime soon. Senate, as you said, out today, not planning to come back until Monday. Meanwhile, the House has now been out for almost a month, and they have no planned return until the shutdown is over. David?
So, Emily, of the two issues, one, the Affordable Care Act and the subsidies, which are going to go away, or the fact that Congress has appropriated money that the administration will not spend, which is at the fore now? I feel like, it was all about the Affordable Care Act, but we've been hearing a lot more about that other issue of late.
And I think, David, that's because when it comes to Congress, really, you hear about these shutdown fights every year, but behind the scenes, there really is bipartisan negotiations that go on throughout the year about exactly how they're going to fund the government. Right now we're talking about a stopgap. When it comes to actually how the government will be funded for next year, fiscal 2026, there is a bunch of bipartisan agreements that have already been done, already on paper. And so having that rescissions process and the White House kind of undermining that previously bipartisan agreement, that has caused a lot of kind of internal concern. But I think when it comes to messaging, most Americans don't know what a rescission package is, but they do know what their health care is, they do know what their insurance premium is, and they do know that it's going to go up if we don't see these tax credits have some sort of extension.
All right, Emily, thank you. Emily Wilkins in D.C. Time now for a CNBC News update. Dom Chu has that for us. Dom.
Good morning, David. President Trump's former National Security Advisor John Bolton surrendered to authorities today after he was indicted by a federal grand jury over allegations he mishandled classified information. He is accused of storing top-secret records at his home and sharing diary-like notes with relatives that contained classified information. Bolton has denied any wrongdoing and called the charges politically motivated. President Trump is set to host his Ukrainian counterpart, Volodymyr Zelensky, at the White House later on today. The one-on-one comes a day after the president held a phone call with Russia's Vladimir Putin to discuss the war in Ukraine. Zelensky is expected to ask the U.S. for more American-made air defenses and long-range missiles. And OpenAI paused users from generating videos of civil rights icon Martin Luther King Jr. on its AI video tool Sora. In a statement, the company says it made the move because of a request from the King family after some users made disrespectful depictions of Dr. King's image. OpenAI says it is currently working to strengthen guardrails for historical figures. So, Sarah, an interesting development in AI. I'll send things back over to you guys.
Yeah, they're sort of learning as they go, I guess. Tom, thanks. After the break, government data still in a blackout from the shutdown. But we've got some exclusive new findings from CNBC's All-America survey on the economy, on inflation, and jobs. Plus, Evercore Vice Chair Krishna Guha with his take on the economy, the markets, and the Fed. We'll be right back.
almost took a short here, but the setup wasn't clear. I kind of had the feeling this is going to fade, and I knew that I would not buy this or back up. This is going to fail completely. Had all the signs. But I feel a little bit of fumble right here because I saw weakness, but I don't like to act only on that. It's just too risky, you know. But I saw this move. It was gone. I doubt it's going to come back to test the orb and give us a short entry with the EMAs.
Some growing pessimism from Americans on the jobs and inflation front, according to CNBC's latest All-America Economic Survey. Let's get over to Steve Gleason. He's got some of the key takeaways for us. Steve.
Thanks, Dave. Yeah, the public's concern with losing their job grew in the latest All-America survey, along with ongoing worries about inflation and wages not keeping up. Take a look, 26% of the public is worried about losing their job. And that's up from the average of the last several times we've asked that question.
Let's hope the price just consolidates. This EMA picks up with this region. This price comes to test it. Then I'm going to probably go heavy. Not heavy, but heavier than I've been, more than 2 contracts on that rejection of the orb back down.
But then take a look here. Black adults more concerned, more worried, less confident. Latino adults as well, and that compares with white adults who are very confident, 61%. College grads also a little bit more concerned when you look at it. High schooler less worried. They're pretty confident in their jobs. If you have an annual salary, again,
it's not quite there. If it happens now, it's like probably get 2 contracts, but didn't even have a chance.
And the job market now comes to prices. 75% Americans say prices are rising. That's the 2 here. 50% say faster than usual. 25% a little bit more slowly. 14% say level off. 10% say they're going down. Meanwhile, just 31% of the public think their wages will increase in the coming year. That compares with 8% seeing them actually increasing. That's the lowest level we've seen since 2021. So not a lot of outlook for that. So combination. Job concerns, higher prices, wages not keeping up. That underpins a generally poor attitude Americans have about the economy right now that has dragged down President Trump's approval rating on the economy further into negative territory. And guys, I know that the data's not that bad, but these numbers are kind of sour, I'd say.
No, it jives with some of the Indeed postings of people, looking for holiday jobs that we showed earlier, or people Googling new jobs. Like there's definitely anxiety, but Steve, it makes it even more the predicament for the Fed because there's also expectations of rising prices and inflation.
Yeah, I think that's an issue out there. There's just inflation expectations the Fed follows.
It's okay, market's not really giving me an answer yet, so at least from my standards. Yeah.
Democrats are more sour than Republicans. What we look very closely at here, along with our Republican and Democratic pollsters in this poll, are the independents. They're very sensitive to economic issues, and they're trending negative on the economy right now.
Yeah, guess the Fed should stick with the middle maybe for overall data, even though we don't have any. Thank you, Steve.
Thanks.
Steve Leisman. We'll continue the conversation now with Krishna Guha, Vice Chair of Evercore ISI. I mean, what is your sense of where we are, both on jobs and inflation, which matters so much right now, and there's so much uncertainty without the data?
Yeah, well, look, as Steve very correctly summarized it, we continue to have a weakening labor market on the one side, and we continue to have inflation moving a bit higher on the other. So this is not a favorable set of conditions, although I would say perhaps not as bad as was feared, of course, in the earlier months of the year. I think the key thing to understand is that when we look behind the macro aggregates for the whole economy, we have this double K-shaped economy. By sector, anything that's remotely AI related is booming. The rest are weighed down by policy uncertainty, by tariff pressure on margins, by weak labor force and population growth. And we have the same K-shaped economy by consumer. At the high end, the folks who are collecting the equity net worth gains are feeling good and consuming strongly. But in the middle to lower cohorts, real labor income.
Almost pressed the button there on the short side, but still I'll have been
Slower hiring, it's
jumping the gun.
wages, and it's the bite out of those wages coming from inflation.
Yeah, I mean, I raised this possibility.
Did not give me the answer that I wanted.
It's not likely, but we do get an inflation report next Friday and then a Fed meeting the week after. Is there a chance that that reading is firmer than expected and would cause the Fed to reshape, rethink the policy?
So there's absolutely, the possibility that that print could come in hotter than expected. I have to say, I've been anticipating that at some point in the kind of fall, we would probably see, a hot month or two. It could just be lumpy pass-through of tariffs, right? So, one would want to interpret any single month's data with a degree of caution. Really what you want to look at is the cumulative picture that's emerging over several months. And that's the key to understanding the Fed implications, right? The ship has sailed on an October cut, almost regardless of what that next inflation print has to say, really because one print does not a trend make. And of course, because the Fed has not gotten the reassurance they would like to see that this labor weakening is remaining moderate, mild weakening and not starting to accelerate into something more worrisome than that. The assessment, quite reasonably, that Fed leadership has settled on is that the risks to labor have been rising, the risks of inflation certainly coming down, therefore into better balance, therefore policy should be moving from restraint towards a more neutral setting, spot neutral, maybe 3.5 or so, even though the longer run neutral 3, because inflation still elevated. The question is more, could that narrative change by December?
I just don't like the setup as much because it went too low. If it was hovering around the area and faded from there, it would be a better situation because it went too low. It went like 15 points low. And
That's the sort of thing that could put December at risk. But I think we still have a strong base case.
this is a strong move back,
Data to tell us why the Fed should not be cutting in December. Otherwise, they will go ahead and do both opt and day.
So how do you explain what we're seeing in the job market right now? Because as I mentioned earlier,
You know what I mean?
there's a lot of resilience and obviously GDP.
It was too strong of a move.
Fire with AI and the investment in America, but consumers held up. But the lack of job growth. But also
Maybe I jumped the gun there, boys. I'm not gonna go more than 2 contracts. There you go. I'm out.
But how do you explain that? What's happening there?
I didn't like the setup. The setup would be perfect if this was a little closer. This was too strong of a move. Too strong of a move.
But I think the key to understanding the economy right now is
This is hard. It might fail, but I can't act on it right now.
Labor side is weakened. That's what, of course, makes this a risk-friendly environment for the market because you can give me cake and eat it and get the growth, but you still get the Fed cuts because the Fed is taking its cue primarily from the labor data. But the question is, where is this going? What's driving it? Where's it going? So my interpretation of what's happened up to this point is that the growth surprise has been very much driven by the secular AI capex plus the AI-related stock wealth gains that have fueled high-end consumption.
Fuck.
The AI capex.
Fuck.
But it's not particularly labor-intensive.
Just faking me out. I did it to the touch. I should have not done that. He did a perfect entry on this candle here, but I was not ready. Because he gave you risk and then, oh man. Okay. Well, I have to wait now. That's sad. I was waiting for the setup. And I jumped the gun, stopped out, and the thing failed. My way. Wow.
This year, growth stronger than expected, mostly because of AI-related
Wow.
labor soft, mostly because of uncertainty in the tariff squeeze on margins. The question is, next year, what happens? Does growth continue to firm, labor firms with a lag, in which case things tighten up, maybe we don't get any or many more cuts? Or, and this is the one I'm really interested in, I think is a close balance of probabilities, do we get a handoff for the reasons that are keeping labor soggy this year to AI labor impacts, supply side impacts starting to arrive next year, so labor stays soft even as
Oh, fuck me.
very, very attractive Thank you.
Have a good weekend. Krishna Guha.
Bitcoin is below $110,000 a coin. Losses accelerated yesterday after one firm made a $300 trillion mistake. We'll give you those details next.
Trend Tracker is sponsored by CME Group. CME Group, where risk meets opportunity.
Wow, dudes. Wow. Yeah, we're in trouble. We are in trouble.
Welcome back. Cryptocurrencies under pressure this
We're
morning
fucking in trouble.
after a
This needs to reverse right now.
Yeah, you heard that right. $300 trillion mistake by a partner of PayPal, which sent shockwaves across the industry yesterday. CNBC's Mackenzie Sagalas has the story for us. Can explain to us what exactly happened here. Mackenzie.
Hey, David. So PayPal's big crypto bet is its dollar peg stablecoin. It's called PYUSD. And as you said, it briefly created $300 trillion out of thin air this week without any reserves to back it. Now, there aren't even enough real dollars in the system to cover that. It was more than 100 times all the U.S. cash in circulation. Now, in terms of what happened here, the mistake was made by Paxos, which is PYUSD's issuer during an internal transfer. It showed up publicly on the Ethereum blockchain and then was reversed about 20 minutes later after on-chain observers flagged it. Now, fat finger mistakes, they've happened before. Tether once minted $5 billion by accident, and Citigroup mistakenly sent $81 trillion in a single transaction last year. But this incident comes after Congress passed the Genius Act, the first U.S. stablecoin law, which is raising questions about why that framework didn't prevent it. Analysts found that PYUSD's smart contract was part of the problem. It gave a single wallet unlimited minting rights. That means no rate limits, no multi-signature protections. And as for the fallout, the token briefly lost its dollar peg One major crypto lending platform froze all PYUSD activity as a precaution, and the crypto market started to sell off. Now, that said, Paxos did flag that no customer funds were
I
affected.
can't add. I'm going to guess a grain.
New York's financial regulator says it is reviewing the incident and is in contact with both Paxos and PayPal. No word from PayPal on this. Their shares down 5% since last week, though they are turning positive after the open. Sarah?
Growing pains, I guess. Mackenzie, thank you. Mackenzie Sagalis. When we come back, what Mamdani, Cuomo, and Sliwa said about attracting New York business in New York during last night's big debate. Stay with us.
I knew it. I knew it. He's doing that all day. Setup is fucked. That's why I didn't hold. Just got my money back. Got lucky. Got fucking lucky. Got fucking lucky. Alright, wait for a better setup.
Welcome back. NBC New York hosting the first general election debate in the New York City mayoral race last night. Key line of questioning, how candidates would treat the business community. Moderators asking Zohran Mamdani what he would say to a big tech CEO contemplating moving its headquarters to New York versus another city like Dallas.
New York City has something that Dallas or no other city across this country could actually offer. And that is the quality of life. That is the arts and the culture. That is the people that make the city so special. And I, as the mayor of this city, will deliver that quality of life, will deliver the safety that is the cornerstone of an affordability agenda, and will ensure that companies choose to come to this city and also choose to stay in this city. Because so much of what drives the tech sector is a hunger for innovation, a unrepenting desire to actually innovate, and those are the very things that are going to characterize my city government.
Andrew Cuomo was questioned about what he'd tell a CEO who is considering a move outside of New York based on taxes and the high cost of living for employees.
I get it. I understand your frustration. I understand that the far left has been raising taxes and making businesses feel like the enemy. We get it. That's gone. The DSA, the socialist orientation, we're not socialists. Didn't work in Venezuela, didn't work in Cuba, didn't work here. We know that we have to work with business. We want to be your partner. We want to have taxes that help us grow our city, but are competitive for you.
We're at time.
And we want to partner to grow your business and our city together.
I'm gonna go to 51. I don't give a fuck. I knew this is gonna fail. I'm so glad I fucking got in.
Our companies are being recruited away by the day. We have young
We're going to 51. Actually, fuck that. We're going to fucking lower day, bro. We're gonna do a round trip this time. There we go. Go. Fucking poop your pants now.
Obviously, this is a really important race for New York, in particular for the business community, for the country. I think is watching this one pretty closely. The person on the Democratic ticket is a socialist and is advocating policies like free buses and free healthcare and more affordable housing and rent freezes and wants to raise taxes.
Scott Reckler was here, of course, very big real estate developer in New York City. We talked about it earlier, and he made the point that many have, which is Mamdani is not necessarily in a position to do many of the things that he promised in terms of what you just raised as a result of needing the state to go along.
Right, but the state assembly is very left.
Yeah, but the governor may not be. So it's not clear that all those things can happen. But it's interesting because a lot of that had the ring of something that I was focused on many years ago under the de Blasio administration, which was the failure to sign that deal with Amazon, which, of course, had chosen New York to be one of its key headquarters. Now, it has created more jobs here, but it's nothing like what it would have been having one of the premier companies in the world headquartered in New York and everything associated with that. There was a lot of pushback from the far left then. It succeeded. It would be curious to see what would happen if, in fact, that opportunity came again, which I very much doubt it would.
Well, this is what it's about. You know, we don't want to lose business because then we lose jobs. And then we also lose tax revenue and we have fiscal problems. But if you raise the corporate tax rate from 7.25% to 11.5% as he wants to do that, whether he can or not, it's not a great signal. 2% tax on millionaires.
That's absolutely true.
So, you know, it's a little bit painful.
To be continued, Sarah.
Yeah, November 4th.
Right.
Get out and vote if you're a New Yorker. Coming up, Apple just announcing a deal to bring Formula One races to Apple TV. We're going to talk to the CEO of the Cadillac Formula One team. That's the brand new and first American team about this agreement. Money Movers begins after this.
I'm gonna pause, guys. I'm gonna have to take care of the dogs. Pause still. Okay, let's get back to this. I'm glad I walked away because this looked on the 5 like a good place to short, and he blew his body out. This might provide a very good long with this EMA crossings here against the orb. But I've made all my money on the orb today to the downside, but it's just a tricky one. This is a very tricky one. If these EMAs cross positive on the way up through the orb, we can maybe make new highs, but I don't know if the market wants to do that. It's kind of a chop. Now,
shares. Did you get all that? They're falling after the
wow, look at that rejection.
Woo. We'll have that story when we come back.
Woo! He's holding this area right here. Wow, look at that. It's a lot of resistance here. I did not understand this. And as soon as this unexplained breakout happened, it gave back with fierce, and this didn't have a chance. And then it's been rejected since then. You know, I think now that he tried so many times, now it's going down. I would not understand if this thing goes back and tests it again, you know. So, I don't know. Wow. Yeah, it's going to crush anybody that has any long bias today to break this area right here. That's going to be insane. Yeah, this is going down hard now. It's gonna fail to lower day, and it's gonna go through it, and it's gonna just puke. I would not be surprised. There are two strong EMAs on the hour chart converting around VWAP and 66.51. So this should be 56.51 and 66.48 right here. I pulled it up for you guys. It's right here. So this might be a huge hold. If he breaks that, the lower day has no chance. I don't think that when Thursday lower day has a chance. This thing is going down, 100 points. But now, how do you position for that move? You know, how do you position for that move?
The regional banks that are broadly diversified, and that's almost all of them now, are really well managed, in my opinion, and these are one-offs. And you heard a couple of CEOs mention these as one-offs. I don't think they're systemic. I think the banks have done a really good job as a whole post the great financial recession of diversifying risk and managing it much better. So I think a lot more risk that used to be in the system is now out of the system, and over time we'll see the banks perform reasonably well. Of course there'll be one-offs from time to time.
That was the CEO of Huntington Bank. He joined us last hour. A number of the regional bank stocks are bouncing back this morning. This after a lot of credit concerns, certainly heightened concerns yesterday put pressure on the group. Leslie Picker's following all of the moves. He joins us now. A bit of a rebound today, Leslie.
Yeah, definitely a rebound today, David. Thanks in large part to a slew of third quarter reports that we saw this morning. They really assuaged concerns about some of these credit quality issues. You've got Truist, America, Fifth Third, Huntington, showing pretty decent metrics in areas like net charge-offs, non-performing loans, which indicate the health of their balance sheets. The markets are digesting the news, though, from yesterday.
They bounced to 49, 75. It's going to be hard to look for a short entry now. Needed to be here and then ride, because now it's just, I think it's going to whip a little bit around here before he goes. I don't see I don't see a short entry right now for me. Maybe on the 5, but not now. I'm late, you know, because he gave a risk here. You could put a short straight against the demand zone. I don't think this demand zone is going to hold though. I think this demand zone is like depleted. I think this might be a fake move back up, but but that would be a crazy way to go short here. It's just that's too ballsy. Maybe I'll take one contract if the conditions look all right. Let's see. Okay, let's see. Yep. Nope. That would be very ballsy. But I'm not trusting this this level as a demand level anymore. Even though it's in my chart, I don't believe it.
To start to see a significant move down.
The bounce from the EMAs on the 15 that I showed you guys not too long ago.
Yeah, so that stock up 5.4%. It did get an upgrade from the analyst community there, which in large part is saying they believe the issue is contained and going to be better than expected. But they hosted an investor day yesterday. They basically believe and have said that they were defrauded from this issue. Now, being defrauded is really important as it pertains to recoveries because a bankruptcy is more of a slow boil where ultimately, you hope to recover a bit more. If you're defrauded, depending on how bad the fraud is, you could recover less. So I think as we kind of try and understand Tricolor versus First Brands versus what's going on with this Zion's borrower, this private credit borrower that they're dealing with, is, there's a difference between fraud and there's a difference between kind of a bankruptcy. And it looks like two of these instances
That was a clean bounce.
allegedly are fraud, which could indicate higher losses potentially.
A very clean bounce.
More of a slow boil bankruptcy where it works its way through the process and they're hoping to recover a bit more relative to the dollar.
After all that, financials are down 0.4% on the week. Good earnings, some issues, but actually very little movement.
What a week,
overall
right?
for the group. Crazy week for you.
I can't take a position there. That would be just reckless.
New 5-year deal with Formula One for its U.S. TV rights. That announcement today. We'll talk to the CEO of the Cadillac F1 team after the break.
Plus, with the government shutdown,
There was an inflection point here. Look, 60, 59.75, then a little above 60, and he made another little bit above 60. That could have been a short as soon as he wicked down, but in the middle of the range, that's just scary. It's just straight against a demand level that's been holding hard. It's risky word there. It'll be a stupid scalp, in my opinion. Bigger picture, that might have been the entry. That might have been the entry, but okay, I don't think this is playing a role anymore. I'm gonna send one down like this channel right there. Well, that was the entry. Saw it, but I mean, that doesn't mean that I should have acted, Yeah, this demand zone's not holding, man. This thing's gonna go blow through the lower day. Blow through it. Under this, we're going 50 points down. I mean, that's what it looks like. Aussie put I got there, but that will be an entry for one contract. This is too strong against the EMA's in the 15. But now's the truth. Now's the truth. We should expect a battle right there. 48, maybe I told you 48.50. Yeah, that should be a battle there. But if we lose lower day, man, this thing is going on down. Depends how we lose lower day too. Also, Thursday lower day. I'm not letting this one go. I'm going to watch this one.
Welcome back. Big news today. Apple and Formula One reaching a 5-year U.S. media rights deal that will bring all the races to Apple TV in the U.S. Apple will be paying about $140 million per year for the rights, according to our reporting. Joining us now
Just refuse to take a loss, so I'm going to put a stop at 20. I might get stopped out right now. Yep. Not allowing this to happen. I don't give a fuck. Might have been a mistake by now.
Yeah, I think it's a big change. And with change comes...
Let it run without me then. If he's not going to be a clean move, I don't want it.
Now of Apple coming to Formula One to bring the broadcast rights starting in 2026. And from a Cadillac Formula One perspective, we couldn't be more excited.
You have an interesting story as well, because you're not on the grid yet, but you're coming next season as the first American-based team, right? You're going to be based here in this country, and I think the Apple deal also is a sort of, it's a recognition that the U.S. market is very important and continues to grow. What are your hopes for the TV rights deal? What fans will be able to experience on Apple?
Yeah, I mean, I think, coming off the success of Drive to Survive and now the movie, these have created opportunities to bring a lot of new fans to Formula One, in particular in the U.S. And I think when we see over 50 million people in the U.S. identifying as Formula One fans, we now need to get them watching races. And I think this Apple deal is a great step in that direction. And of course, again, from the Cadillac perspective, as we're trying to grow our fan base, particularly in the U.S., the timing couldn't be better.
Because there is this debate out there about whether F1 has peaked in the U.S. We have 3 races now. We've seen the big growth out of Drive to Survive and the movie. And clearly, F1 is getting higher than what it got from the ESPN deal, which I think was around $85 million per year. So is there a lot more growth in this country? I know you're making that bet.
I think there's a lot more growth for Formula One. Innovation is one of the key pillars in Formula One, and then really just getting more fans to see what Formula One is all about. I think when anyone gets to see Formula One up close, they're just enamored with the technological wonders, that these cars are, the racing, the storylines. I think Apple's ability to tell these stories to American fans, to create these cultural moments, I think we're only just starting to see the beginning of the growth potential in the U.S.
I'm going to wait for the 5-minute candle.
I mean, it is interesting that so many of the partners in recent years since
This can just chop us around.
So many of the partners and the sponsors are American companies. I mentioned Amex and Salesforce and AWS. I mean, that's who the sponsors, not to mention the team sponsors, which are so many American companies. How's that going for you as you try to attract new partners?
Yeah, it's been great. We've seen a lot of interest in Cadillac, in Cadillac Formula One, Cadillac as a brand. And so being a new team coming on the grid, it's been...
Oh, I missed the move, boys.
I think there are a lot of U.S.
I don't know what I do that I miss the moves. I have the right ideas. I just get gun shy sometimes, This was good. This was a good entry against the EMA. It's a very good entry. This might just accelerate now. If it comes back again, then I don't know if it's going to be a good entry because of the price actions are going to show, It's going to show hold and push. So, I don't know.
So many businesses are getting involved in this sport and sponsoring, and now it's actually moving from the corporate space into private equity and into the alternative investment space as they try to appeal to retail investors. So what is their payoff if they partner with a team?
Yeah, so in partnering with the team, again, you get this exposure to Formula One. It's the place to be. I think when you look at some of the different races all over all over the globe, from the Middle East to Asia, Europe and the U.S. The money that's coming to those races, but also the social reach, the media reach that that
Yeah,
the sport
too strong.
has. And again, I think this ability to
Way too strong.
brands that not only want that brand awareness, but to
Way too strong. This is not a short.
a stronger female
I don't like that.
and to be able to change the perception around those brands.
I don't like that. I don't care if he reverses.
I think the brands are really seeing, the return there, and I think that's why this is the place you need to be for emerging brands.
Way too fucking strong.
To start a Formula One team from scratch.
Yeah. Way too strong. See, like the difference between the price action. This was a good short on this level, but doesn't mean that the price goes back to levels another short. I didn't think that that would be a good idea, because that would show hold and go. Now we have a battle here. It might be a good short now. I mean, on the top here, with a stop above 61.50. 61.50 would be a good stop above this candle. Take the short right here. I missed it. I wasn't paying attention to that, but yeah, that was the short right there.
I am part of the advisory board of the McLaren F1 team. When no, I do not change tires, David. I'm just sort of officially a fan. Is really what it means.
Is that really what it means? Because it sounds very important.
It sounds important,
but it is
really
important
not.
enough that you have to disclose it. I guess is that what
I have a bias for Lando Norris and Oscar Piastri, who are the McLaren
team,
and they're the winners right now too.
Oh, they
which
are.
is great. Yeah.
Well, you're a winner too, Sarah.
Thank you.
So there you go.
It must be my presence on the advisory
You're all
board.
together. I would still like to see you, and they're in the pit.
I can't change a tire and I can't drive a car.
All right, but you can watch.
But I can.
And give advice, apparently. Let's get a news update now. Bertha Coombs has it.
Stop the high this candle.
Hamas is
High.
its commitment to a
53.50.
ceasefire deal with
There you
Israel
go.
today, including a pledge to return the bodies of all 28 deceased Israeli hostages. Hamas says some of the bodies were buried in tunnels that were later destroyed by Israel, and that heavy machinery will be needed to retrieve them. President Trump refiled a $15 billion defamation lawsuit against the New York Times 1 month after
I only went there because I think the move low is stronger than the move high. So I think we're going to keep going down from there. I might just be stopped out because it's not a perfect answer when it comes to candle formations. But if I take a loss, it's a very tight, very tight stop. And if I take a win, I'm not gonna get rid of this until 66.32. So tight loss if I take it. Yeah, tight loss. It would be like a 4R, but.
The airline said in August, when it filed for bankruptcy, that it wants to cut $100 million on pilots to conserve cash.
Sarah? Okay, Bertha, thanks. When we come back, what American Express results signal about the strength of the consumer and the outlook for spending, plus the CEO of the National Retail Federation.
Yeah, price does not want to give that. This demand zone is just strong.
We'll be right back.
I want to take one more short if he comes here. 59 maybe. I'm gonna start playing with a 5-minute chart now. I'll take that short right there. High 657.50. I'm going to play off the 5-minute chart. Something's telling me that this demand zone is not going to push this price higher. Doesn't feel like it will. I am not going to sell a lower day because I don't think lower day is going to mean shit. And I hope he'll fail and shorts will play the orb down to the downside. You know? Hope he'll fail the orb, retest, go down. This might be a 2-hour hold. I got one contract because I don't want to get burned anymore.
Welcome back. Increased card spending helped drive a profit surge for American Express. CNBC's Hugh Sun following that this morning. Hugh, looks like a good
Even with more volume on the buying side here, this price still fails. So more volume on the buying side, the price still fails. This, I think, the whole idea here is to dump. Now, I have only one contract. If I don't find an answer to add, then I don't know, man, like I gotta probably sell at 62.32, 66.32. That is like 20-point win for a 4-point loss, the risk, right? That's
Finally, Lakai tells me that the reception to their refreshed Platinum card exceeded their expectations with about 2 times the number of new card signups as before the refresh. Sarah?
Yes, and I incorrectly said that they're just gray. They did do a limited edition mirrored platinum card, which apparently people are very into. That and the $300 Lululemon credit.
Right.
Thank you, Hugh Sun. For more on the consumer as we head into the holiday season, let's bring in National Retail Federation CEO Matt Shea. The NRF just out with its new holiday spending.
I'm gonna add there.
Good to see you. So,
Hi, Sarah. Well, I think you heard
realization at 404. That might have been a bad idea, but
the 3 big themes we've seen this year.
let's see if I catch this.
Really driving enormous amount of consumption in our economy.
High, 66.54.
Behaved in a very, very resilient way. Our forecast for the year is running several percentage points ahead.
654.50.
So it's been a surprise to the upside. And then I think third, retailers have found a way to work with their suppliers, their partners, gain efficiencies, and avoid many of the price increases that we anticipated earlier this year. So I think the combination
Might have been a bad ad, not gonna hold.
Consumer, the overall consumer resilience, and real solutions
For the bigger idea.
their partners points to a pretty healthy season.
I am not touching my position until I see what's happening over here. It needs to, we're gonna expect a bounce. If this thing fails with power, we are good. We're gonna make extremely lows today. So this is not about the money now, it's about being right about an idea.
And today it's more than 50%, more than half, driven by the top 10%. So I think
my stop needs to be on top of this candle, which is high, 52.75, 53. I need to stop.
consumers are increasing. They're using
I can't afford this price to go. I can't be, my stop can't be here.
But I think that's the consumer that's really stretched.
I think I'm not gonna wait for this. I'm not gonna sell to the touch. I don't think this is gonna hold. I'm gonna wait for what this price wants to do there.
Record or near record numbers. So I think as we get into the holiday season,
There you go.
the survey we put out, our forecast will come out.
Get rid of one.
But the survey of consumers
Got rid of one, and then he held, and then 404 is my stop. Okay.
I think that's a really good sign we're going to have a healthy season. What happens in the first half or the first quarter?
This is expected. Lower day, didn't go with force. I'd like to see this volume stay above average and the candle close red. I don't like that right there. And then I like to see fail, come retest, play the orb on the downside. And this should put a little bit of a battle, but bro, I think this is gonna be a huge inflection point to the downside.
Yeah, David, I think that's the question of the moment, isn't it? And so, as you said, the tariff numbers are piling up. So the receipts that are collected. So I think reasonable.
I think we're well positioned here. Thing is, it's lower day, so lower day, sometimes you get a big move up from it, and then just to fade, just to stop you out. But well, it is what it is.
You can't have a $400 billion tax on the economy and have it not show up somewhere. It shows up somewhere. I think a number of people have.
I like this 2-minute time frame set up here against the 200 and the 9. Like an okay short spot, and that's why I rejected from there. I don't think this is gonna hold anymore. It's looking grim for the longs.
To avoid passing on any price increases. I don't think that's possible forever, and I think people recognize that, but we're going to have to work through.
The big thing is gonna be, the big thing is not even this. This is the big thing. If this gives, especially with strength, man, I think my next stop gotta be my target needs to be 6,600. Right, 30 more points there.
And does this change the dynamic?
Yeah, sir, I think this is a period of disruption unlike anything we've
Lower
ever
days
seen.
holding.
I think we're beyond sort of the normal business uncertainties, and we're into a level of almost unpredictable volatility that you really can't account for from one day to the next. And smaller businesses, retailers and others, have no ability to leverage their strength across a broad platform to negotiate with their partners or to reduce prices. They're really truly
Forced me out.
at the mercy of whatever we're doing on our various policies that affect the
I'm glad I got rid of one here. Man, look at this bounce. This is a strong bounce. This is a solid bounce from the orb.
to do any forward planning.
Solid bounce.
What to do in terms of inventory management.
Now I don't think any short position it's gonna hold.
This year is you'll see very careful approaches to inventory because some of these purchasing decisions were made months and months ago when there was a lot less certainty about the future.
This might just reverse now.
Next year, I don't think anyone wants to be caught carrying excess inventory that they're not going to need based on market demand. So there's a lot of things we don't know yet, but we do know consumers have been resilient. The top end is carrying things forward, and retailers are really finding solutions with their partners thus far to avoid the kind of price increases, as David said, that early this year many of us anticipated.
All right, Matt, thank you for joining us and give us some color into the sector. Really
Yeah, this is a strong move up, guys. Stopping all the shorts. Wow, this demand zone was strong. I didn't think this. I expected a bounce, but I didn't think that this would have held at any, anything close to what he did. This move was not above average right here. This move was not above average. And the Q's About to make a new high from the previous 15-minute candle. The price now is wildly gone, so maybe the mistake with the plan was that to go hoping that the orb would fail, but I thought they would because of the trend, and I don't know. I don't believe this move for some reason. Having trouble believing this move. I'm going against the grain here because it just looks sketch. The volume was above average, but it doesn't feel like this is sustainable. I think that was a fake move. Well, if this 5-minute candle turns red, man, with this big wick, this was just a stop out. So many people were thinking short too, and it was just a stop out. And it makes me feel like, oh yeah, people are buying. It's becoming bullish. This is just stopping out. There was some buying, but there was a lot more short stopping out and buying out of their position. That's what I feel like it was. Double top. I got my stop to the pip there. Let's see. If this thing rises back to here, it's like a 3-hour trade. I just don't like that this is trying to cross. It is a long setup, but I just didn't believe it. Yeah, I was wrong. It is a long setup. Man, every time I try to hold longer for shit, like for a fade move, I get burned. And then when I don't, the thing fades all day. It's such a hard deal.
$billion, both seemingly positive. Stock did move up a bit after those numbers were shared yesterday, but of course you can see down almost 8%. Seema Modi's here at Post 9. She has more on sort of what's going on here.
So David and Sarah, let's talk about the price action because as you just pointed out, David, really bullish numbers around growth trajectory, the outlook on artificial intelligence infrastructure, those gross margins numbers expected to come in the 30 to 40% range in 2030, higher than consensus. Here's the deal. Earnings guidance does imply a dip in margins in 2028 before recovering into 2030. So perhaps a little bit of short-term pain tied to the build-out of data centers. Rishi Jaluri at RBC Capital says it feels like the stock may take a bit of a breather here as investors digest those numbers and get comfortable around the achievability of long-term numbers. What Oracle has done, though, to play catch-up in cloud infrastructure is notable. This graphic from Jefferies, taking the rounds this morning, illustrates just how Oracle's record backlog in cloud contracts puts it ahead of Amazon, Microsoft, and Google. And keep in mind, Oracle, as of a few years ago, did not have any skin in the game. It was a latecomer. Management last night confirming on the call that $65 billion in new commitments over the past 30 days does include not just OpenAI, but a new customer, Meta. Analysts, though, including Julia, are more skeptical about Oracle's longer-term attractiveness as AI training costs decline. The industry, he believes, will gravitate more towards Microsoft and Amazon for inference. Now, Oracle founder and chairman Larry Ellison last night throwing a bit of shade on his competitors, saying Oracle does it all, from building data centers.
I like the setup that's kind of forming on the 5, but the risk reward is 2R max because you have to de-risk here.
Yeah, Larry likes to talk about
great
whole
word.
idea, I know, I love it. I'm not sure what it means, but I guess, combining your ability to have private data and then the public availability of data for your LLM to use it and use the Oracle Cloud, obviously, to help you find solutions to any questions you might have.
That was one of the points they really tried to hit on at the conference earlier this week, this idea that so far large language models are being trained on the open source, but over time, being able to extract the data that Oracle has, that becomes a bigger opportunity for enterprise. Now, we got to see how that feeds into earnings, because right now, what the market is still looking at is the open source LLMs and how they will be leveraging the cloud infrastructure that Oracle is running. So far, this morning, no price target changes to the downside, only to the upside, David and Sarah. Barclays from 367 to 400, Deutsche Bank from 335 to 375. So yes, the stock is down. The sell side right now is still confident.
So I was going to say, bull case intact. They didn't do anything to shake. It had run up so much.
Seems so. Again, slight dip in margins potentially in 2028 before they get to that ambitious target in 5 years, but that seems.
But not the kind of margins that I think, David, you alluded to that were in that information report.
Yeah, that was 14%. That was a number that seemed to be dismissed by the CEOs when I spoke to them on Monday. They didn't obviously offer any specifics, but now we do know, at least over time, 30 to 40%.
Wasn't that encouraging, the fact that they actually addressed it head on? A lot of times companies will say, we're not going to break that number out, but we'll give you some commentary on how the demand
Without a doubt. Yeah, it was interesting talking to those two. Of course, one of the most important companies there is, Oracle, certainly having moved, as you just noted, to the fore, in fact, of providing so much in terms of the AI ecosystem, so to speak. Sima, thank you.
Meantime, Salesforce CEO Mark Benioff facing some Silicon Valley pushback over his support for a National Guard deployment to San Francisco. Prominent startup investor Ron Conway resigning from the board of the Salesforce Foundation yesterday, and this morning, Maureen Powell-Jobs out with an op-ed challenging Benioff's response to the criticism, writing, quote, "In his eyes, generosity is an auction, and policy is the prize awarded to the highest bidder." Benioff spoke to our Jim Cramer about the issue earlier this week. Listen to what he said.
Nothing is more important than the safety of every person who's here, and we've brought in hundreds of additional cops and police
but
and
did you call the
CHP
president to say
to do it.
You need soldiers?
Listen, the most important thing is that everyone here is safe. That's my main focus
And that's
today.
what the goal
and
is.
That's the most important thing. You know,
Because a lot of people feel like, well, wait a second, you went to some sort of dark side. I think you went to the safety side, personally.
I went to the safety side, but in today's world, everything is so divisive that you can say anything, and all of a sudden it's a firestorm, and it was.
I mean, he clearly touched a nerve, evoking some of the images of the National Guard in cities and ICE deportations and all of that. But Mark Benioff has been so consistent over the years in his support for San Francisco and advocating for safety. And he's become one of the biggest, if not the biggest, philanthropist of San Francisco.
And has the
funding
biggest,
all sorts of
biggest
things.
tower in the city, too, right?
Biggest job creator as well, and funding, affordable housing. And I think this is what he said is consistent on his message of safety. And he's right. Everything has just become so political lately. The fact that there's so much backlash against him, I think, is crazy.
In the so-called blue states and cities to having the National Guard being deployed against the governor's will, which is not typical, as we know, happened during the civil rights.
But if you look at his quote, it wasn't that
nonsense.
what he said wasn't that controversial. He was just saying, look, if they can be cops, we need more cops in the city. Great.
Right. It's not clear that they can be cops.
Right.
I'd have it happen just pick
that
up
was what he
trash,
said.
though. That seems to be what they've been doing in
I think
Washington, D.C., unfortunately.
Safety comment. And look, Benioff has been, liberal funder, but he gets along with lots of presidents, and even in the Trump administration part one, I remember he worked with, for instance, the president's daughter Ivanka on a reskilling program.
So you don't really think it's any change in him that's being perceived by others, that he's sort of gone.
Maybe he came out a
done
little bit
180.
more embracing the president, but he shouldn't get criticized from that, by your own board member of a foundation leaking your memo to the New York Times, especially with all the good that he's done for the city, if he's just advocating for safety. That's all. But, this is the world we're in. Still ahead, stocks in the weight loss industry moving lower on fears of lower pricing. Following those comments from President Trump, we're joined by a top analyst to discuss the outlook for the sector and how that would impact their profits. We'll be right back.
know what's stopping me out. It will. It will. It's gonna be explosive too. It's gonna be a fucking $20 loss. I'm really well positioned though. This is scary to add. I can't add on this thing. Can't add. This will be hope. I'll add there. It's a risky put. It's against the grain. Fucking A, dude. If I take this loss here, I'm gonna stop doing it because I can't afford to. I cannot afford. This is it. I'm done. I will see you guys later. Have a good day. It was good. It was all right.